Welcome to Yadnya Investment Academy. Through our fund analysis series, we had reviewed some of the good tax-saving funds, that is ELSS funds. In this video, we are going to compare some of those funds and see how they stand on various fund comparison parameters. As you can see, we are going to compare Axis Long-Term Equity Fund, Birla Sun Life Tax Relief 96 Fund with their benchmark, which is S&P BSE 200, and we are going to compare Reliance Tax Saver Fund with its benchmark, which is S&P BSE 100. Axis Long-Term Equity Fund has a lower standard deviation as compared to its benchmark, whereas Birla Sun Life Tax Relief 96 Fund has a higher standard deviation, indicating that Birla Sun Life Tax Relief Fund takes little higher risk. Standard deviation of the Reliance Tax Saver Fund is still higher, indicating it is even more volatile. The beta values of the Axis and the Birla Fund are lower than 1, indicating that these are more stable and would fall and rise less when the markets move up and down. Whereas a reverse is indicated by the higher beta value of the Reliance Tax Saver Fund. An R-squared value greater than 0.8 indicates that the beta value is highly reliable. But in case of Axis and Reliance Fund, these values are below 0.8, but still they are not so below. So let's move ahead and look at the other comparative values. Now all these funds invest into the large cap, and when you invest into large cap, you can expect returns of around 12%. But over and above that, Axis and Birla funds have done a very good job by generating an alpha of around 10 to 11% for their investors. A higher amount of the beta value in case of the Reliance Fund had predicted higher amount of returns, but over and above that, the fund was able to generate 10.51% of returns for its investors. Now once the beta and beta dependent values of a fund have been compared with its benchmark, we are free to compare funds falling in the same category even if they follow different indices. So let's move ahead. Sharpe ratio indicates the amount of returns generated per unit of risk taken. So if you look at the Sharpe ratio values of Axis and Birla funds, these values indicate that the funds are generating higher amount of returns for less amount of risk taken. Whereas in case of Reliance Fund, the value is lower than 1. It means that they are taking higher risk, but they are not able to pull out those much of returns from their risky investments. And so these risk return parameters indicate that Axis and Birla are low risk funds, whereas Reliance is a high risk fund. If the P ratio of a fund is lower than that of its index, it indicates that the portfolio of the fund has potential for growth. But as the portfolio of a fund keeps on changing each day, so does its P ratio and so does its average market capitalization of the stocks a fund is holding. And that's why I have highlighted these two parameters, the P ratio and average market capitalization in red, indicating that these are temporary parameters. A turnover of 140% indicates that the fund has bought in or sold stocks worth 140% of its assets under management. So if a fund has a higher turnover, it should translate into higher returns for you. A turnover of lesser than 50% indicate that the fund has been following a buy and hold kind of a strategy. If we look at the turnover value of Birla Sun Life Tax Relief Fund, it is very less, indicating that the buy calls of this fund have been proved right, indicating that the portfolio of this fund has been pretty much stable and the average market capitalization has been around 27,000, which also tells us that this fund has been holding higher amount of mid-cap stocks. Higher as in not higher than its proportion of large cap stocks, but yes, on the higher side compared to its benchmark. If you look at the market capitalization of the Reliance Fund, this is also indicative of higher amount of mid-cap stocks in the holding. If we look at the trailing returns of all these funds, except 1 year trailing returns of Axis Long-Term Equity Fund, all the three funds have beaten its benchmark. A low amount of expense ratio by the fund house indicates a higher amount of profits being passed on to its investors. So Axis and Reliance Fund score here. Axis Long-Term Equity Fund was launched in 2009, so as compared to Birla and Reliance Fund, this has been a late entrant. But its huge asset under management is a reflection of investors' trust into the fund. All the three fund managers have spent good amount of time with the fund. All the three funds have done well in terms of trailing returns, except in one instance where Axis Long-Term Equity Fund was not able to beat its benchmark in 1 year of trailing returns. Let's look at the calendar returns and find out how these funds have fared in the market's ups and downs. Only in the year 2016, Axis Long-Term Equity Fund was not able to beat its benchmark. In all the other years, it has done well. In case of Birla Sun Life Tax Relief 96 Fund, it has happened 4 times where it was not able to beat the benchmark. Twice when it was the market downtime, that is 2008 and 2011. But in the market rises of 2007, 2009 and 2014, it has beaten its benchmark almost by 15-20%. Which might be due to its higher holding into the mid-cap space as compared to its category. Reliance Tax Saver Fund was not able to beat its benchmark 4 times. This difference was huge in the case of 2007, and when it was market downtime, it was better able to control its losses as compared to the benchmark in the years 2008, 2011, and in the years 2012 and 2014. The fund outperformed its benchmark by a huge margin, which completely lifted its trailing returns. If you look at the returns of SIPs in each of these 3 funds for 5 years, where the monthly investment amount is 10,000 rupees, the value of investment in Axis Long-Term Equity Fund after 5 years would be 10.17 lakh rupees. In case of Birla Sun Life Tax Relief 96 Fund, this value would be 10.31 lakh rupees. And in case of Reliance Tax Saver Fund, the value would be 10.47 lakh rupees. And this compounded annual growth rate would be 20.85 for Axis Fund, 21.38% for Birla Fund and 22% for the Reliance Fund. Now the investment strategy of all these funds is to invest its major portfolio into large cap growth stocks. But due to their exposure into mid cap category as well, Axis Long-Term Equity Fund seems to be a more stable kind of fund where it doesn't take too much of exposure into mid-cap stocks. Birla Sun Life Tax Relief 96 Fund and Reliance Tax Saver Fund are for more aggressive investors where there is little more exposure to mid-cap space, which is evident from the kind of returns these 2 funds have produced. But Birla Sun Life Tax Relief 96 Fund seems to be a more stable kind of a fund, which is evident from its Sharpe ratio. The risk return parameters and the calendar returns indicate that the Reliance Fund is a little higher risk fund which could take you on a little bumpy ride. Friends, do remember that even when ELSS has a lock-in period of only 3 years, you should go for equity investment only when your investment horizon is more than 5 years. We have compared all these 3 funds on all possible parameters. We'll compare the remaining funds which we have already reviewed in our fund analysis videos. Thanks for watching this one. Watch this space for more such topics. Until then, happy investing.